Yeah, my name is Rick Howes. I'm the president and CEO of Reunion Gold. Reunion Gold is a Guyana-focused exploration company with a new discovery at Oko West in Guyana. Oko West is shaping up to be a great deposit in a very mining-friendly jurisdiction and is led by a strong management team. To date at Oko West, we have outlined a gold mineralized envelope of about 2 kilometers long and from surface as deep as 575 meters. And we are well funded and advancing the project as fast as we can.
Rick, thank you very much for the introduction. Good to be meeting you. Good to have Reunion Gold with us today. Now, when I look at the share prices of most junior companies or most gold companies over the last 2 years, it's kind of a ski slope that you wouldn't really want to ski down. The Reunion Gold share price has gone the other way. It's gone up, which obviously reflects the discovery, the process that you've been involved in, which is a good thing. We like that. Your market cap is, up at 450 million Canadian. But you've only been involved for 3 months, so you can't take all the glory. And you've tried retiring once, or maybe twice. What brought you? What brought you to Reunion Gold, and why did they appoint you?
Yeah, I mean, I knew some of the people in Reunion Gold, David Fennel for sure, the chairman, executive chairman. So he was keeping me somewhat up to speed on what his activities were in that area. I had retired back in 2020 from Dundee Precious Metals. And I was probably discovering whether I wanted to be fully retired or not. And when the call came from David to come join him at Reunion, I jumped at it once I got a good look at what he was doing in the country of Guyana and what the discovery was that they had recently at Oko West, and really getting to know the board and management team to see what kind of a team it was.
You're a mine builder. You're a mining engineer by background, and when I look through your CEO, through your CV, I can see work in Bulgaria and Namibia with Dundee as an operations guy. Have you come in to build a mine here?
Well, certainly, I'm sure that was a skill set that the company was looking for to add to the team strength, and that's certainly my background. I think that bringing that added facet to the company of having track record of building mines was part of the thinking behind bringing me on board.
And sorry, I said earlier that the market capitalization is around $450 million Canadian. That's actually your fully diluted market cap when all of the warrants and the options are in. As of today, you're at about 366 million. I mean, let's just talk about that capitalization, that market capitalization. You've got there's a large chunk of warrants out there, and you've got 990 million shares in issue. And what's the extra? It's about 200 million warrants which are outstanding. Does that mean that this company has been around for an awfully long time? Is the number of shares just kind of a reflection of the long history of the company?
Yeah, that's true. I mean, the company has been around since 2003. So obviously it has over periods of time raised capital for various exploration and other activities of the company over the course of those 20 years. Most of that activity revolving around activity in the Guyana Shield.
Almost, I've had a look at the your warrant table, and almost all of them are in the money. I mean, there's one tranche which is at 39 cents, but you're trading at 37 cents at the moment. So pretty much all of your warrants are in the in the money at the moment. So it's fair to say that we're going to be using your fully diluted market capitalization as a kind of as a marker for your overall company value. Would you agree with that?
Yeah, I think that's fair. Yes.
And this extraordinary geology which runs down the east side of your kind of tenement area at Oko West. Your most recent drill news release says that Block 4, which is kind of one of the key parts of that structure, has been drilled down to 1 kilometer's depth. We're 970 meter below surface. Now, when I look at your long section, it seems to me that Block 4 is somewhere between 400 and 600 meters wide, depending on where you look at it. Could you describe your plan for Block 4 and the kind of the broader trend during the course of 2023?
So block 4, yes, is certainly where the highest grade portions of the discovery so far have been found. And we continue to step out from that block 4 area to expand the strike length and obviously depth as well of the discovery. So we're in a phase of exploration where we have, got a good handle on the block 4 mineralization down to about, say, 500 meters now. And we've poked a few holes deeper to see if that mineralization trend continues along that structure. And we've confirmed that with the 2 deep holes that are down close to 1 kilometer in depth. But the focus will be on really expanding the open pit mineable material along strike and depth to down to the mineable depths of an open pit. So that's going to be the 2023 focus. The block 4 represents, as you say, about 600 or 700 meters of that strike length. But when you add blocks 5 and 6 and block 1, you're close to 2 kilometers in length. And really, we've found mineralization on almost that entire length now. And that is where we're now moving to expand that drilling to cover off those areas, not just block 4, but blocks 5 and 6 and block 1.
When you talk about kind of the mineable depths of an open pit, have you started internalizing what that drawdown depth would be?
Pits typically, globally, pits can go quite deep. It's really a matter of the economics that determine how deep a pit can go. So as you get deeper, obviously, and depending on the pit slopes, if you have to take more waste in, ultimately it's how much waste stripping or waste material you have to take per every incremental depth of ore source you have. So in our case, the grades are good, and it looks like we certainly are viable as a pit down to at least that 500 meter depth. The question will be, what is the optimum pit depth? And that will have to be looked at in a study, which we would do as part of a early preliminary economic assessment of the pit.
You haven't put out a resource yet. Are you working towards will you put out a resource this year to kind of define mineralization within that, let's say, top 500 meters?
Yeah, that's correct. We will continue to drill the step out that I talked about, really to determine the sort of the mineralized envelope that we're looking at before we finalize a mineral resource estimate. So that drilling over the next, say, 4 or 5 months should be completed. And once that drilling is completed, we'll then assemble that information and generate a maiden resource estimate.
But that envelope that you're targeting, you won't chase it deeper on kind of steeply dipping shoots or plunging shoots. You're effectively looking. You're conceptually saying, let's just put an envelope around an open pit.
That's what it is. An envelope around an open pit.
Okay.
Correct. Yeah.
And you mentioned grades are good. I know it's dangerous to do this without the resource statement, but a lot of you're getting some good grades and kind of 4 5s up to 10 grams a ton over some thicknesses, and you're getting some wider sections over 1 and 2 grams per ton. I think I've seen this many times in the past, is that when you put a kind of a global resource together, the average grade tends to settle at the lower end of that range. Have you experienced that in the past?
Yeah, for sure, the anomalous higher grades, or the more less frequent numbers of higher grade intersections, certainly tends to have a skewed distribution of the results and most deposits. So this one is typical of that as well. So yes, the final settled grade, is going to be at the lower end of that range. If you were listing just the range of intersections, it would be at that lower end, but it's certainly high enough grade to warrant an economic pit. That's for sure.
Absolutely, and you've got the advantage of an intense weathering profile for the the top 40 or 50 meters, don't you? I couldn't exactly see what the depth of the saprolite is, but it's 40 or 50 meters.
Yeah, it ranges. But on average, it's probably about 60 meters, but it ranges all the way up to 80, even 100 meters in some sections. And that's certainly a big plus for the project. Saprolites means we can push the material through a milling process at higher volumes because we don't need as much crushing. The material's already broken. So.
And are you going to be doing, so as well as kind of getting that envelope and then drilling it with sufficient drill density to be able to declare a resource on it, how much of your exploration budget is going to go on that envelope analysis, should we say?
How much of our exploration drilling, or how much of
well, I mean, either in meters or in dollars.
Yeah, that's what I mean. So, to fill in, obviously we would want to put as much of that material into inferred category or indicated category as we can. So, the drill spacings will dictate what the amount of drilling is. But in the order of 75,000 meters would fill in the envelope that we think is a mineable pit envelope with sufficient information, so that most, if not all, the material would be in the inferred or indicated categories. And
am I right in thinking you've got seven rigs on site at the moment?
We have 7 rigs on site. That's right. 5 diamond drills and 2 RC drills. Yes.
And so how long is it going to take to do that 75,000 meters? Are you talking 6 or 9 months or?
That's about 6 months of drilling to do that drilling. Keep in mind, we say that we will do the drilling to essentially try to determine the step out dimensions of this envelope first, and then we'll produce a mineral resource estimate in which most of the material will be, captured as inferred material. And then if we drill further, that 75,000 meters would start to fill that material that's inferred into an indicated category. So there's really 2 stages. The first stage is drilling to get that envelope totally, and it would mostly be inferred material. And the second stage would be to convert that inferred into indicated. So the first stage is there's probably another 30 or so thousand meters to drill to complete that first stage of drilling.
On top of the 75.
Yeah, the second stage is to convert that material into an indicated category. Yes. So on top of the 75s. So 30 to initially get a handle on the amount of material in I'll say in inferred and indicated for a mineral resource estimate, a maiden resource estimate, and the second stage just to fill that in.
Okay.
Into an indicated category.
Yeah, gotcha. In the presentation, the dating from November on your website, there's talk about other targets and other drilling. Is that, do you have one rig kind of on regional targets or other targets?
We're using the scout rigs, we call scout drilling rigs, or RC rigs, for sort of targeting areas first. So the initial steps are to drill these RC holes, mostly through the saprolite and then hopefully into hard rock to see whether the mineralization exists in these areas. And then we follow that up with the deeper diamond drill rigs, the ones that can go down, as deep as a kilometer, to test those deeper into the hard rock zones and confirm what we have. So it's, like I said, it's 2-stage process of exploration drilling. The first stage is the RC drilling, scout drilling, and the second is the long diamond drill holes. So we have several areas to target in the property that we're looking at. One is what's known as the Takatu zone, which is a zone that follows a long strike along that shear zone we have, but further south to the southern border of our property, and that's about 3 kilometers long. And then we have zones to the west of the shear that we think have potential as well, and we will be testing those this year as well.
In your board meetings, when you talk about strategy for the company, what's the conversation around the potential of the block? What's the conversation about exit strategies? And what are you trying to do? Is it to take to try and get as much into that open pittable resource and drive the value up on that, or are you playing a not playing, but targeting kind of a potential of the entire block kind of approach?
I think it's pretty straightforward that we are trying to outline what that shear zone that we've discovered, the mineralization along that shear, which is over 2 kilometers long, what exists along that particular zone. So that's both the what we call the Karuni zone and the Takatu zone. So those all the total of 6 kilometers all along that 6 kilometer strike. That's the priority. Is to identify what's there and how much of that is economic and what sort of mineralized envelope would we be able to generate from the drilling. So, and it's not, the priority is certainly open pit mineable material first. If there is underground potential, it won't be a priority to drill off the underground potential at this stage. It's more the priority to be drilling off the open pit potential first. And as far as also the regional exploration, it's to find out if on that property anywhere else are there other potential sources of economic mineralization in the whole property, which is 4,000 hectares. So
yeah, what you don't want to do is focus on something which isn't the main resource in a project, or indeed sell it and then find out that your person you've sold it to finds the big one next door.
Exactly.
Talking about selling it, you mentioned that the company started in 2003, and of course David Fennel, who's the executive chairman of Reunion Gold, was the founder of the company, and so he's been at the helm for 20 years. Is he tired? Does this feel like kind of the exit moment? And have you finally got the asset that you think, all right, now we can sell it? Is that the plan? Is it? Let's define as many ounces and it's yours.
I think David loves this business of mining. He's been in it for over 40 years. He's been very successful. Has started a number of companies and sold a number of companies quite successfully. So. I mean, you'd have to speak to him about what his personal sort of strategy is and his own personal goals. Certainly from a board and a company perspective, we're keeping all our options open. Bringing me on board clearly was a message to the markets that, the company also has the ability to build this project if we want. And so it's sort of one of the pathways to value, I would say, that we would call one of the options that are still available to us. And the one that we probably only certain of is the one that we control, and that certainly is the one where we go ahead and build it ourselves. But the other options clearly, being taken out, perhaps joint ventures, mergers, and other possibilities. Those are all on the table still. And certainly, there's going to be this company. This is going to get a lot of attraction in the market. They're very hard to find deposits of this quality. Out there, and particularly this quality, but in good jurisdictions. If you take that combination of a high quality asset in a good jurisdiction and at large scale, they're few and far between in our industry. So,
what do you must have benchmarked this? You must see what kind of valuation per ounce an open pittable simple metallurgy resource goes for on $1 per ounce on a transaction level. I mean, have you got a figure in mind that you try to benchmark yourself against?
Certainly, you can look at Great Bear. You can look at that particular transaction that Kinross acquired.
They didn't have a resource.
And they didn't even have a resource at that time. It was perhaps something that's a benchmark really for a deposit of high quality and its potential. So we have a very good understanding of what the value of this deposit should be on the basis of the comparables and looking at what's out there in the market today and what they're going for and what they're being valued at. And so we're early days. We don't think we found the end of our sort of total ounces picture yet. So we're not, trying to peg a number on it right now. We really just focused on making sure we find everything we can find on that property that adds to the total picture of what we have. So
I see you've got Barrick in there as an 8% shareholder. What do you have a kind of in fact, let's talk about your shareholder register as a whole. You've got Dundee in there at about 17%, Jupiter, which is a UK-based investment manager, at about 9%, and then Barrick at the next largest at 8%. I know you've only been at the helm for a few months, but have you had conversations with them? Is the shareholder relationship with Dundee active? Is that how you came in? And have you spoken to Barrick?
So I certainly am very familiar with Dundee, and Jonathan Goodman's the CEO of Dundee Corp. Worked with Jonathan over many years at Dundee Precious Metals. So yes, I've spoken to Jonathan for sure. Jonathan was a sort of a big supporter of me jumping into that role here as a shareholder. And yeah, I mean, it's good to have good shareholders and good supporting shareholders, and certainly Dundee's is everything that we could hope for as a supporting shareholder. So Barrick, I haven't spoken to Barrick people yet. I haven't just familiarizing myself with the alliance agreement and Barrick's intentions behind their investment in the company. But it's always good to have a corporate strategic behind you as well in your investment shareholding registry. And so I'm pretty sure Barrick's a supportive shareholder for this project to move forward as fast as we can.
Can you, for the sake of the viewers, just outline how that came about and when they became a shareholder?
Yeah, I might not have the details 100% right, only because I just sort of heard it through through my introduction to the company. Is that they did want they formed an alliance partnership with the company, alliance arrangement where any exploration projects would potentially have Barrick choose to participate in, with an earning in arrangement where they could ultimately earn into a 50-50 participation on any discovery projects that we had. And ultimately, if it went to feasibility and they carry the cost through to feasibility on the project, and then if feasibility is completed, they can then move to 70%, 70-30 ownership of that particular project. So that arrangement, the alliance arrangement is what I think drove their perhaps equity investment at the same time.
And this project is not inside the alliance. Or is it?
It is not. No.
Yeah. So this is 100% held by Reunion, but that you've got other projects in the alliance with Barrick.
That's correct. Yeah.
Good. And your cash position, please?
So we have currently 44 million on balance sheet at the end of the year. So we're still in very good shape to carry out all the work we've got planned for this year.
What's your approved budget for the year? Is that a public figure?
It isn't. We don't typically publish the budget figure. Certainly, we can say that the planned expenditures that we have, that I talked to earlier, the spending on the outlining of the resource and on the strike and the exploration activities I talked about, and the advancement to a PEA level study, all of that is funded by this amount of money we have currently on our balance sheet.
And hopefully you'll have some left over at the end, that you won't be gasping for air.
Exactly.
Now you've had a great share price run for a couple of years. Quite often the high watermark for company valuation is when they put out their resource. You've got the envelope. Is that something that you are concerned about? How do you plan to keep driving value once you, let's say, in the second half of this year, you've capped the growth or the upside in terms of the volume of mineralized material that you'll have identified?
I mean, we'll continue through the drill bit to add as many ounces as we can to our envelope that we discussed earlier, and any future discoveries. Obviously, if we find anything else on the property that's worth following up, we'll put drilling focus on those potential areas as well. So, that primary value creation, I think, is in adding ounces to the picture. So that will be the number one focus. And then de-risking the project, advancing and de-risking the Oko West project itself. That'll be the other the other driver of value. So certainly crystallizing what we have there in terms of economic mineralization, and determining sort of what feasible mining and processing and sales process we would have for that particular project. So
have you got a handle on timing on when perhaps we might see a first economic study on this, a preliminary economic analysis?
If everything moves along as the current plan shows, we would be looking to have the economic study sometime near the end of the year completed. End of this year, end of 2023.
Okay. Oh, that'd be great. So, thank you very much. It's been a fascinating introduction, and it's been really nice meeting you. Good luck with the work program ahead. I mean, it's an exciting time. Just kind of perhaps by way of summary, could you talk me through the news flow and the kind of the value steps that you can see delivering to market during the course of 2023?
Yeah, certainly. So the key ones will certainly be our release of drill results as we continue to step out and drill out this shear zone along the strike length that we have, and any further discoveries we make through the course of this year. The other is of course the mineral resource estimate, the maiden resource estimate, which we would target to get out sometime mid this year. And the third would certainly be the PEA study that we expect to produce towards the end of the year. So those being the key ones, key milestones for this year.
Great. Well, onwards and upwards. Thank you very much for your time.
Okay. Thank you. Thank you very much, Merlin. Bye-bye.